So I met Kyle about 2 years ago, something like that. I had joined the Learn Land Mastermind. I got stuck with this guy. And it actually turned out to be awesome, man. We became friends. We would chat every month. If you guys don't know, Kyle used to be a lawyer, so I'd hit him up with all my irrational fears of being sued and these law questions, man. I don't know if you guys feel this way. I have always been terrified to get sued. I don't know why. Like, it's like a fear that like runs through my head 24/7. And that's why I hired the best lawyer in the business, Seb Garcia. Seb's going to talk today about protecting yourself in your land business and how to not get sued, hopefully. Kyle's gone from lawyer to land investor, kind of doing like the standard buy for 20, sell for 40 stuff. And I think if I'm right here, Kyle, Q4 of last year, you're like, screw this, I'm done. Like, I want to go after the big boys. Kyle's like one of those guys that's kind of like private equity bro meets land investor. You know, he's more of like a financial guy than he is like a land guy, if I'm being honest. But what he's going to talk about today is how to go after big old deals, 6, 7, maybe even 8-figure deals. We're talking entitlements, we're talking rezoning, we're talking subdivides, all that jazz. It's going to be a really fun conversation. This has been an area that we've been focusing on for like the last 15 months in our business. And it went, cool, we're going to go use the exemptions in the states that are friendly for subdividing. Do your classic Texas 10-acre chop up. That was cool, and we started going up and up and up, and now kind of our maniacal focus is entitling. So we're really creating paper lots and selling them off to developers. I'm not sure we'll talk a little bit about that today. I know I have questions because Kyle's a wealth of knowledge. So Kyle, I'm going to give it away to you. And let's give it up for Kyle as he comes on stage.
Thank you, guys. You remember how earlier Sumner was talking about all those coaches that he went to that sucked? I was one of those coaches. But he really was too good for all of us. So he's where he needs to be. I'm where I need to be. I'm not really coaching anymore. I like to help people. But I am at heart a deal junkie and a deal maker. And so that's kind of where I've tried to position myself throughout my land investing career. So I'll go a little bit about me. And then we can talk about the ways that we try to add value to land, the ways that you can think about adding value to land. And honestly, I'm also here to try to convince you not to do this if you don't have a high risk appetite, okay? If you have a low appetite for risk, do not try this at home, all right? You can and will lose money. Okay, and I remember, Mike was talking about his $187 in his bank account, and he said he thought this was the end. I'll tell you, when we switched to primarily and solely this strategy, I had a team working for me, payroll of $17,000 a month, not including myself. I had 17 grand in credit card debt. I needed to make payroll. We were spending 10 to 15 grand a month in entitlement costs and had to put my payroll on a credit card. So, but then we closed a deal where I personally made like 160 grand in profit the next week. So, it's really low lows and high highs. So I'm a former real estate attorney, or as I like to call it, a recovering attorney. You're always in recovery. You're never out of recovery. So I still, to this day, use the legal knowledge and the deals that we do. And, every now and again, I get a little bit of an itch to start a law firm specifically for this type of thing. And it's like, no, can't do that. I've been an active land investor since 2019, started in May of 2019. I am, a Land Academy OG from back in the day. But since that time and in the past 2 years, we've raised over $1.5 million in private money. In the pipeline right now, we've got $4 million in development projects and always looking to add more. And we also, in addition to doing our own developments, provide advisory services for people who, like yourself, or looking at deals where you can add value. Maybe this is your first go around with that. You need somebody to help you walk you along through the process. We'll do that. We'll invest in the deal with you. We will help you raise the money. We'll help you, get the approvals that you need, walk you through it, kind of hold your hand. So yeah, that's what we're doing right now. So where did I start? Like a lot of people started with the podcasts, started with small, cheap lots. It was kind of the same thing you hear all the time. I listened to Mark Podolsky on Bigger Pockets and thought, that's interesting. At the time, I was doing apartment syndicating, and that was just a terrible industry to break into from the get-go. I didn't like it. So I thought, well, how can I scale back the risk that I'm going to take and still do something. And so I heard about land flipping, and I was like, we're going to do this. And so my wife said, I'll work with you. We'll do this together. So, downloaded all the data, picked where I was going to send mail. And then my wife got pregnant and was like, I don't think I want to do this. So I was like, all right, well, here we go. And then within the next, I think 2 years, I had quit my attorney job, and we had my son, and then my wife was pregnant again, and now I'm the only breadwinner of the family, and things kind of can get dicey that way. So I've always had a really big risk appetite, which is, I think, why I'm still here, but also why I may not be here tomorrow. So if you don't hear anything from me for the forever, that's what happened. But along the way, I made many, many mistakes. Probably should have listened to people that were speaking to me to tell me not to make those mistakes, but I usually like to make them myself to learn them better, I guess. So where did I go wrong, and why am I where we are now? What I thought when I started land investing was, I want to be the Tory Watson, Landio, right? If anybody remembers from back in the day, Landio, like the best land marketing ever. Like the guy was a filmmaker, and then he switched to land and just creates these beautiful advertisements for his property. And I thought, you know what? I'm going to be better than he is at that, which was stupid because I just don't like marketing. So why would I do that? Anyways, I hired a director of marketing. I hired an operations manager. I hired even more acquisitions team and, all this stuff. And like Mike was talking about earlier, I was focusing on things that didn't really matter, right? Because I wanted to be flashy, showy, all this stuff, when I should have been focusing on just base hit after base hit after base hit, low drag, high efficiency, things like that. So listen to what he says. Don't do what I did. I had raised private money. We needed to place it because we were paying interest on it. It's a classic 2021 financial move, right? Crypto was a thing. Crypto bros were everywhere. People were like, we should do land and Bitcoin, and we should do smart contracts with all this stuff. And, I just got, money's free. Money's everywhere. If we get all this money, we can find all these land deals. Everybody wants land. And that was kind of at the wrong time. We got stuck with some deals we probably shouldn't have bought. We just thought, man, we need to spend this money on land as fast as we possibly can. Don't worry about deal quality. We'll just do them. And because we want to be, Landio 2.0. Don't do that. That's where we went wrong. So I came to a point where, I've got 25 grand a month in fixed expenses that I need to cover, and our deal transaction volume either needs to grow exponentially, or we need to grow the number of zeros behind each deal, which also comes with an increase in risk and lower margins, to be honest with you. So we ended up just laying off a bunch of people to make our team leaner and to focus on the things we needed to focus on. We honed our acquisitions strategy, tightened our buying criteria to deals that we were comfortable with, that we knew that we could do. And I ended up taking on a partner to complement my weaknesses. So if any of you guys know Matt Walt, if you've been around a while, you might have heard of him or worked with him. So we actually combined our businesses so that we could keep the flips going, keep the team working, but also focus a large part of our energy on finding bigger deals, value add deals, raising money, talking to real developers, for lack of a better term, and increasing the quality of our craftsmanship. Because at the end of the day, that we talk about what's your why. My why is not necessarily freedom. I've got a wife and 3 kids under 4, so I don't have much freedom anyways. But I do like spending time with them, right? And I also like working hard. So what I wanted to do was create a business where we could take dirt and create beautiful places out of that dirt, or create useful and meaningful places out of that dirt, and do it in a way that I could be proud of in front of my family, and do it in a way that would also allow me to incorporate, my kids eventually in that business if they wanted to do it. So that's kind of what we shifted to. And it's probably maybe not the smartest financial decision, right? Like we could focus on just doing the flipping, doing more of that and make more money, but I don't like that. Anyways, So what we're doing now, we are doing flips in select markets that we're comfortable with. We're doing what I really love are exempt subdivisions where you don't have to do really any county approvals, but you can create a lot of value. We are doing entitlements and PUDs, which are planned unit districts, and we're working on our first full horizontal PUD in Tennessee, which I'm super excited about. And like I said, we also offer do advisory services, kind of help hold your hand through these deals. What we have gained through the past couple of years of doing this is a lot of experience in the money raising area, and even just talking to people who are raising 10 times the amount of money that we are, understanding how capital flows in more advanced real estate markets will actually help you in your business, right? Because if you're looking to move from the level you're at to the big boy level where people have careers and jobs and there are outfits that do this on a bigger scale, you need to know what they are thinking about when they're thinking of allocating capital in the land investment space. What risks are they concerned about? What downside protection are they looking for? What criteria do they use in looking for development? Because when we started looking at these types of deals a lot, we would, people would email us parcels, hey, this would be great to, pass on to a developer. And I was like, no, it's not. No, it's not. This has like 30 feet of road frontage. You're going to have to use that all for a road to build back into a wetlands property. Oh, but we could fit like 30 lots. No, because the builders that you want to sell to have a minimum of 250 and nobody's going to buy it, right? It's these things that, when you think value add, oh, if I get a big enough parcel, we can chop it up and do this. Rarely, okay? Rarely. We probably look and underwrite, 20 deals a week. And in the past year, we've gone under contract on 3, maybe. So you got to keep that in mind. Okay. So the value add ladder, there's lots of ways to add value to land. I think you should always be looking at your deals through that lens. And unless you're doing the Mike formula where it's just simple, straight, exactly what you're doing, it's honed. Like if you're looking at a bunch of different deals and want to figure out how to set yourself apart in a marketplace, look at how do I add value. And it can honestly be as easy and simple as clearing, grading, cleaning up trash, right? Adding curb appeal adds a lot of value. If you want to think of it in terms of the residential sales market, like if you're a realtor, you're going to list a home, what are you going to do? You're going to go in there and say, okay, all this stuff needs to go. Like, get all your crap out of here. We're going to stage it with nice furniture. We're going to have a professional photographer come in and take photos and make it look nice. And it's going to smell like freshly baked cookies. And we're going to have an open house. And it's going to sell, right? You need to think about that with your land. If you're selling land that people are actually going to use and not, just buy on the internet on terms, and that's totally fine. But if you're going to sell something that people are going to use and they're going to bring their wife to and say, hey, maybe we'll build a cabin, maybe we'll put a Airbnb on here, maybe we're going to use this for hunting and it's going to have trails. Adding curb appeal adds serious value. So cleaning up the trash, clearing out a little spot where a house could go, putting in a driveway from the road, bush hogging stuff, like that adds value. Okay, that's probably the easiest. Requires almost no approvals. Maybe you need to get a permit to put in a culvert in a driveway, but other than that, you're just hiring a contractor with a bush hogger and a dump truck to haul away the trash. Pretty easy return on investment. All right, then what I would say next rung up the ladder, or really down the ladder, but the next one is lot splits. Now, this isn't exempt subdivisions. This isn't, whatever. What I'm talking about is, hey, you've got 15 acres and some guy's got his house on there. He wants to keep the house. Well, let's carve out 3 acres. He keeps that and boom, you've got yourself another vacant land parcel that you can sell. He's happy. He gets to keep his. There are rarely any approvals involved in that. It's usually just done on a survey and you can take care of all of that through title. Really, really easy way to add value. All right, the next one would be minor subdivides where you've got a lot of road frontage. You've got, say, 40, 50, 60 acres, maybe 100 acres, and you can cut 10-acre tracts without having to add major infrastructure like power, like running water lines, doing roads, things like this. In the markets we work in Texas and Tennessee, in Tennessee, it's 5 acres. As long as you've got road frontage and 5 acres, you're exempt from the platting requirements. Most places in Texas, if you've got road frontage and 10 acres, you're exempt from platting requirements. And if you can find a difference in value from the per acre price of the whole parcel to the per acre price of the subdivided parcel, we're usually looking for a 70% increase in per acre price, then you can create some serious value, right? So the rule of thumb we use for the minor subdivides is 70% increase in price per acre, okay, from the whole parcel to the subdivided parcel. And if we can keep our CapEx to 30% or less of the purchase price, math says you're going to make a 40% unlevered return. Now, if you put 65% leverage on that, that jumps it up to 125% cash on cash return, okay? So that's why our rule of thumb is we want to see a 70% price differential from whole parcel to subdivided. We want to be able to keep our CapEx to 30% or less of the land basis. We'll make a 40% unlevered yield, and that's where you start to be able to attract money to those deals, okay? I will tell you right now, if you're raising money for subdivides, you are not going to attract people with a 15% return on their money. Way too much risk. Way too much risk. When you can get 5% on a 10-year risk-free treasury, no one in their right mind is giving you their money for a one-time project where they will get 15% on their money with that much risk on a non-cash flowing asset. In a land market where land prices are actually falling right now, all right? You need to offer them something that's mouth-watering, right? And so usually that amount is 40%. If you can show them 40% on a project, they're okay. All right, that might be worth it. I see. And if you can convince them you know what you're doing, okay, well, I'll get on board with this. It's worth the risk. Okay. All right. We're looking for 12 to 18 months, but usually we want to be able to, fairly confident we can do it in 6 to 12. But we tell people 12 to 18 as a comfort factor, right? The next one is going to be major subdivides and plats. So that's where you've got, let's say, 100 acres. You're going to have an engineer put in, 150 lots or 200 lots. It's going to have roads in there, and it's going to need to go through the platting process with the city or the county. You're going to have to follow their subdivision rules. It's going to be more complicated. It's going to take 6 months to 8 months to get that even approved, maybe longer. You're going to need to get public input, public comment. You're going to deal with angry neighbors, things like that. A little more time-intensive, money-intensive. It's got some different exit strategies than the minor subdivisions. Okay, you can sell the entire project to a builder if it's the right fit. If you've got fewer lots, what we kind of like to do is we'll raise the money for the project, get the project approved. If we're going to build the road, we'll do that. And then you can do this with the minor subdivides too, but sell the lots with owner financing. Okay, and then turn around and sell the notes on the secondary note market. All right, you can usually recoup your capital pretty well that way. If you want to, sell some of them on owner financing, recoup all of your initial basis, and then you've got cash flow on the rest. If you're selling owner financing, there's lots of ways to skin those cats when you're adding value, because what you're doing is you're creating a value differential from when you buy to when you sell, and it's not just because you bought at 50%, right? And you're going to sell at 90%. Which is totally fine, great way to make money. But what you're got to think about here is that when you're creating value, you're doing something to the dirt that makes it more valuable to somebody else at a different price. And that value that you create in between can be manipulated. It can be chopped up. It can be sold. It can be traded, right? It can be financed. So that's where you really can get into some interesting things that we can talk about. All right, the next one's going to be entitlements. That's where you find a vacant piece of land. It's zoned agricultural. It's zoned for one single family home, but you think, hey, we could probably fit, 200 apartments units on here. So you go through the process of getting it approved for a much higher density. And when you're speaking to builders and people who are going vertical on pieces of land, they're thinking in dollars per unit of residence, right? So they're thinking dollars per door, dollars per key, dollars per apartment unit. Like they know, they have their numbers. Hey, I need to buy dirt at $15,000 a unit or $10,000 a unit. If I'm going to build, 300 apartment units, my dirt basis needs to be 10 grand a unit because I know my end product is going to be 30 grand a unit and I can get X number of dollars per month in rent. And that's an acceptable return for our institutional investors. So if you're thinking entitlements, you need to think, okay, I'm buying per acre, dollar per acre or dollar per foot. And if this is currently entitled for, let's say I can put 5 houses on this tract, well, okay, that's, X dollars per unit. Now, if I can get this entitled for 20 times the number of units as it's currently zoned for, I can 20x the dollars per unit, right? It's an easy way to make good money if you're in a market where there's demand for that sort of stuff. It's an easy way to force the value of that dirt to increase exponentially. Second to last, we got horizontal construction. So if you went through major subdivide, you went through entitlement, and now you want to actually bring a bulldozer out there and start moving dirt around, start building roads, start putting in drainage and running water lines and sewer. That's really expensive, but that's what it is. And then vertical is obviously, once you go through all that, you're actually going to build the building. So each one of these things is a part of the value chain, okay? They build on one another because every building that you see that you go into always starts as a piece of dirt somewhere, right? And somebody had a vision of what they wanted that dirt to look like eventually. So they start with the dirt, and then they go horizontal, and then they go vertical. And there's always value to capture in each one of those phases. But it comes with attendant risks, right? So if you start with the bare dirt, unentitled, and you take it all the way to vertical construction, you bear all of the risk, but you get to keep all of the value. Your job as a land investor, someone who is looking for value-add investments, is to capture as much of that value chain as you can with as little risk as possible. Okay, and there's tons of ways to do that. All right, let me go through some case studies. This one is a simple value-add lot split. This is in Morris County, Texas, Northeast Texas. The seller, this was 21 acres, 22 acres on a farm-to-market road. The seller had a house on 4 acres that he wanted to keep. And we said, sure, no problem. He didn't care about the back pasture. So all we did was we had a surveyor go out there and draw this little guy with an easement right there. And there was his house. And then we hired a contractor to go out there and clear out the easement, lay down a bed of gravel, and put in a culvert to the farm-to-market road. Bada bing, bada boom. We've now got a 17-acre legal parcel. He keeps his house in the 4 acres, and we can sell this no problem, right? Easy way to add value. Otherwise, we would have had to buy his house for $200,000 and then do basically the same thing, right? But we didn't, because we didn't want to take that extra risk. So we captured the value of splitting off the back acreage without taking on the risk of buying the house and then doing it ourselves, right? So we just worked with him and said, hey, he wanted, let's just carve out this section for you, and you can do whatever you want with it, and we'll do this. Funny thing was, on this back pasture, there was the neighbor's horses and cows kind of grazing on there, and we brought out the bulldozer, and the neighbor's like, hey, what are you doing? It's like, well, we had this survey. This is on our land. Like, no, we've always used this. We've always had our cows out here. So, all right, well, if they don't move, we're going to be having steak for dinner. They eventually moved. Once the bulldozer started going, they said, okay, crap, these guys are for real. Luckily, no guns were drawn. Okay, this one is an example of an exempt subdivision in Navarro County, Texas, about an hour and 20 minutes from Dallas or so. This was a 60-acre tract that we cut into 6 10-acre tracts, just using a survey, no approvals necessary. We had a surveyor go out and do it. Each one had its own meets and bounds description. And then when we sell off the individual lots, they get the survey for that lot plus the legal description for that lot, and nobody's the wiser. And what we did here was we basically just put in, you can see the fence and the gate and the gravel driveway, added a lot of curb appeal because you can drive your truck up that driveway and see, okay, this is my 10 acres. This is what it's going to look like going to my driveway. Oddly enough, we still have 2 that we need to sell that we're about to sell on this one. But what was great about this was, not great. Some funny timing in the land market. When we put this subdivision on the market, I think like 5 or 6 other people had just subdivided 10-acre lots in Navarro County. And so there was like this glut of supply in that market at the time. So we had to wait a little bit. I think, it took 6 months for the first one to sell, but then they started falling like dominoes. And then we're about to sell the last two, and we returned everyone's capital quite a while ago, so it's all good. Okay, this is a major subdivide. We actually just closed on this property on Friday, so it's fresh in mind. This is 20 miles south of downtown San Antonio, a 21-acre lot that thankfully you can see it had road frontage on 3 sides, which is beautiful, and it already had two mobile homes right there. So we said, well, we'll just finish out the rest of that property with mobile home lots. And so we had an engineer and a surveyor draw up this plat. Each one of these is between 1.5 acres and 2 acres. We had a water study done to make sure the water quality was there. We had soil work done. We had drainage study done. We had to go to the county and the city of San Antonio to get approval for this project, but they had no problems with it. And what we're going to do here is just sell them off to mobile home users, either cash or owner financing, and then sell the notes to recap the investment. If for some reason, I mean, gosh, it is so hard for this deal to go wrong. But if this deal goes wrong, a 21-acre piece of land 19 miles outside of downtown San Antonio, I think will be a lot more valuable in 5 years than it is now. Even if we had to scrap the whole thing, put gravel on it, use it for industrial outdoor storage, I think we'd still come out pretty good. But the value here is just honestly just splitting up the lots and making it suitable for a different type of use than it had been. There was strong new build supply coming on, lots of demand in this area. It's sort of the last remaining place around San Antonio that hasn't sort of come out and developed it. Yeah, Sumner? Yeah. Yeah, what do people want? Okay, so this is actually an on-market deal, guys. This was on Zillow for like 90 days, and it was listed at like 500 grand, 490, something like that, and we came in at 425, and they're like, no. And I think we ended up at 450. And they just said no. I think we came back later and said, okay, the best we can do is 465. They said no. And it kind of just sat there. And then 3 or 4 weeks later, their realtor called back and said, hey, are you guys still interested? We can do 465. So we put under contract for 465 grand. The hardest part about this entire deal was raising the money from the bank. We talked to 8, 9, 10 banks, and all of them said, we are doing 0 land loans right now for any reason whatsoever. So we actually had to bring on a partner who had a ridiculously high paying W-2, bring him onto the general partnership, and the bank basically lent against his W-2 to get this project done. So buy for 465. We're going to put about 100 grand into it with driveways, making it look nice, minor improvements. And so I think that we bought it. What is that per acre? Like 20 grand an acre? No, 12 grand. I can't remember. Buy for 465, 100K into it. At the end of the day, it's probably worth 1.2 million. We raised, I think, 350 grand of equity for this deal from partners, and it's basically like an apartment syndication. We formed a limited partnership, did all that stuff, paid for an attorney, etc. But I sent 3 text messages and raised the money for this deal just because it was so strong of a demand area. And even if this exit strategy didn't work, the land itself was high quality land. It was just mismarketed. The realtor was the owner's like mother-in-law, and that sort of situation. So we were able to capitalize on that. So yeah, be looking for that one to hit the market soon. If any of you guys want to buy one of these and put a mobile home on it, you could make decent money. Okay, this one is an entitle and flip case study. So this is 14 acres in Tyler, Texas. We got this through text messaging. This is like the first deal we ever got when we started texting, and I had no idea what to do with it. It was a kind of a weird shaped lot. Like this is actually a tail that goes down here, and it's got a creek running through it. It's basically unusable space. But it was originally zoned only for one residential home on 14 acres in a part of Tyler that was surrounded by apartments, self-storage, commercial, things like that. So we knew And we checked the city's long-term land use plan, and they wanted this to be garden-style apartments. So great. It's surrounded by apartments. It's only zoned for single family, one single family home. The city long-term wants this to be apartments. Perfect. So we hired an engineer to come up with this site plan. We applied with the city for rezoning for a planned multifamily district. So this is going to be 223 apartment units. And then when you go through the rezoning process, you have to give public notice to every landowner within a 500-foot radius of your property. And right to the east of this is a brand new townhome development, and everyone and their mother came out to the hearing. The city actually called us and said, hey, we're really concerned about this because we usually don't get this much opposition. And it was the HOA president showed up, and grandma showed up and said, when I bought this townhome last week, the developer said I'd never have to look at someone out of my backyard, and now you're going to put multi-family apartments? Ah! And so I was like, oh my gosh. So we actually had to go through 3 rounds of hearings because the planning commission was so concerned about the vocal opposition on this project, which is just mind-boggling. I mean, we were putting garden-style apartments, and we were like, okay, fine. So yeah, it was over here. So we designed this row of tall trees so that they would never, ever have to know anyone lived near them again. And it's just so funny. Guys, you just bought this from a developer last year. I'm the last person to ever have to live in a place like this. Anyways, so after 3 rounds of hearings with the city, they finally approved it unanimously. And we put it on the market. I think, what was interesting about this deal is we didn't actually buy it. We went to the owner and said, hey, look, this has taken a really long time. We've sunk $20,000 into the entitlement process at this point. And land values are kind of tanking, and development's kind of tanking, and construction rates are really high. We can't buy this, but we want you to capture some of the value. So what we did was we formed a joint venture with them. So they put up the land as equity. We signed an agreement with them, said, hey, we're going to do the entitlements for this. We're going to entitle it for 225 units of multifamily. We're going to put it on the market. When it sells, you guys will get the first 1.1 million. We'll get our expenses recouped, and then we'll split the rest 50-50. All right. So we just went under contract to sell this 2 million flat, I think, or 1.85 million. So on our end, we didn't have to buy the land. We spent $20,000 in entitlement costs for engineering, for them to go to the hearings, other stuff like that. Then we put it on the market, and at 1.85 million, I think we're going to make $250,000 off that, off a $20,000 investment, which we never would have gotten back if the thing tanked. That money is lit on fire; it's gone, right? But fun way to make some money, and I learned a lot in the process. Learned a lot of not what to do. Cool. Okay, this is my favorite one, probably the most risky we're doing right now. This is a PUD with horizontal development in Tennessee. So this is 75 acres, about an hour south of Nashville on 65. It's about a mile east of Interstate 65. And what we're doing is what's called a conservation development. So this was my hastily sketched out concept plan that we actually are going to pay some guy $30,000 to make a good one. So it's going to be an agricultural forward development it's going to have 40 homes, 10 townhomes, 12 units of multifamily. It's going to have 10 units of commercial, retail, coffee shop, restaurant space. And it's going to be all connected by trails and open space. So it's got a pecan grove, it's got a bamboo forest, it's got a creek running through there, and it's got not a herd, not a gaggle. It's got a bunch of wild turkeys out there. So every time I go out there, it's turkeys doing their thing. So this is our dream, and this is what we've been kind of working towards. We hired a world-renowned new urbanist town planner to plan the design for us, based out of Franklin. And the land on this one is $3.5 million. The improvements are another $3 million, but I think it's worth 14 when that's all done. Now, the problem is you don't have banks lending on these types of projects because the risk is too high. I don't have $3.5 million. I don't have an additional $3 million to do the horizontal improvements. I've never done something like this before. This is sort of a career-defining project, and it's going to cost about $150,000 to $200,000 just to get a green light or a red light from the county, right? So if you want to get into development and do value add, be prepared to light 100 grand on fire just for kicks, right? So moment of honesty, like how do I do that? I don't have 100 grand sitting around because I got to pay my team, I got to pay myself, we got to keep buying deals. Throwing away 100 grand would be insanely bad for our business. So we have to get creative. And so what I basically go and do is if you're in the VC world or familiar with that, they have pre-seed rounds, right? If you've got an idea, but you don't have product market fit, you can go raise your first round of money, but you're going to give up a nice chunk of equity, and your investors know that might go to zero. High chance it goes to zero, right? So we have to go out and raise pre-seed money for this project, where we say, hey, we need 100 grand just so we can apply for this thing, because we need a site plan design, that's 30 grand. We need the engineering done, that's another 30 grand. We need all of these tests and studies. We have to do geotech, we have to do hydrology, we have to do extra high intensity soil mapping, which is $1,000 an acre, like a lot of stuff. You give us that money, and then if the project gets a green light, you get a dollar for dollar investment into the general partnership, and we'll give you a percentage of our carried interest on the deal, right, to make it worth your while. If it goes south, we'll give you some of our carried interest from this other deal we're doing right now. That's pretty much a sure bet, right? So we'll pay you back with interest collateralized by our carried interest on other deals that we're doing. So you have to get creative. It's not an easy space to play in. It can be very lucrative, but you can also lose a lot of money, right? Like I hear a lot of people talking about doing paper lots and selling them to builders, and that's a strategy we're pursuing as well. But I've also talked to several people who did the paper lot sell to builder thing in 2007 and 2008, and it did not work out for them. So it's a great way to make a lot of money. It's super fun. You get to learn a lot of stuff, but it's also a great way to go bankrupt. All right. So if that is your flavor of risk, have I got a proposition for you? All right. But seriously, though, it is very fun, because we go back to, we'll talk about that in a minute. If you go back to what's your why, my why is I want to create beautiful places out of dirt, right? Like this place right here, that's a career defining project, and that's a place where like people want to be. How many of you are from or familiar with Franklin, Tennessee? Anybody? Yeah. Ben, you know West Haven? So we hired the guy who designed West Haven. Yeah, it's Disneyland for homes, basically. And Franklin is honestly like Disneyland. But we hired him. He's a world-renowned town planner, because we wanted this to be the best possible project, because we knew at what it would cost, we would need to create an ultra-premium product that people would be okay, paying $600,000 for a townhome to live here, because it's basically like an English hamlet on a farm, but close to the highway and an hour south of Nashville, right? Like you can't just, with stuff like this on this end, you can't just say, oh, we're just going to go create this thing. You have to create something meaningful and memorable and something you want to be proud of. Now, if you're doing exempt subdivisions in Texas, like it's it's not going to be like Disney World out there, 60 acres with a 10-acre tract with horses and like a trailer and stuff. And that's fine. That's like, we had this barbell approach, right? Like we had the lower, what I call the lower end stuff. You are creating product for people that need it, right? Because people need an affordable spot to put their affordable home. Like absolutely 100% on board with that. Then there's this middle area where the margins are slim, the risk is high. You're competing with like big builders that have robust acquisitions teams. And then there's, the ultra premium product, and we're trying to stay on those ends of the barbell. Okay, I got to wrap it up. If you want to reach me, I am very active on Twitter /X, as they call it now, @TKyle. I regularly talk about the deals we're doing there. I have gained an immense amount of knowledge from people on Twitter about how to do development stuff. You can reach my email, kyle@crockettcap.com, or you can call me, 713-376-4224. All right. Thank you guys so much.
Kyle.